Good evening, everyone, and welcome to the Q2 FY22 earnings discussion of 3IINFOTECH Limited. The company has announced its results just yesterday. We have with us on the panel Mr. Thompson Gyanam, MD and Global CEO, Mr. Harish Shenoy, Chief Performance Officer responsible for governance, risk, and compliance, Ms. Rangapriya Gautam, Chief Marketing Officer, Mr. Sanjay Rawa, Senior Finance Personnel. Before we begin, I would like to inform you that everyone has been kept on the mute mode. If you have any questions, you can use the raise of hand option or type your question in the chat box. Post Mr. Thompson's address, we will take your questions in an orderly manner. We will first take the questions from the participants who have raised their hands, and later we'll move the questions in the chat box. I now hand the floor over to Mr. Thompson to share his key developments, and how 3IINFOTECH is looking to take on new products and services into the market. Thompson, sir, over to you.
Thank you, Snyder. Good morning, good afternoon, good evening to everyone on this call. It's great to be back in 3 months. 3 months ago, we met the first Q1 call. We set the direction for the company, the new 3I, the new team, and it's kind of wonderful to be back again. Thank you once again for all of you to joining us in this call. Before moving to the business side, I sincerely hope that you and your families, your colleagues are all well in these difficult times, this pandemic. The duration, the scale of the pandemic and the economic slowdown remains uncertain, but I think with a positive hope, I expect the overall market, the industry will recover in the coming times. And also in our own small way, to fight COVID, as a 3I family, we were able to kind of vaccinate all our employees, almost close to around 80-90% of our employees and their families, to almost close to 8,000, 9,000 our extended family members have been vaccinated. And with that, maybe I'll quickly move on. So what we'll do is we'll try and I will take you through the progress in terms of the results. And also, I think there are a lot of queries and questions that you might have. I will probably try and proactively answer some of these questions. And then maybe we'll open the floor for more questions, and more than happy to take that on. So quickly, what I would do is just move through our a few slides, and I'm not going to, and all this will be available for all of you. So I'm going to kind of quickly run through that, and just to refresh our memories, and just just to help us maybe spend 1 or 2 minutes on this slide, as we've been talking to you all, communicating about the new 3I's strategy, just to kind of set the context and refresh your memories, so that this also helps you to look at our results from that perspective. And it's very important that all of us look at this result, and it's very important to understand how our company has performed. So to simplify this, we've kind of broken our business into 3 parts, run, grow, and build. It's simple for all of us to understand. Run business is what we, inherited post this carve out, while we were able to sell our product businesses, which were able to kind of, pay our debts and create this new 3I. The run business is a services business which we inherited, and which is the founding, foundation for this new 3I. And that's the run business. And predominantly, we are looking at, how to kind of, aggressively retain our revenues. How do we kind of, reboot this organization and kind of, retrain our resources and, fast forward them to maybe even 2025. So this is a clear focus area in the run in terms of trying to see that if we can reduce revenue erosion. We have been successful in doing that so far, keeping our existing customers happy, and the voice of the customer is kind of, high in terms of the net promoter score, increase profitability of the accounts by reducing kind of cost and eliminating waste in this. So that's a focus area for the run business, just to kind of refresh our memories. Grow is the engine of growth for us, where we are reorganizing the company in terms of redeploying our sales resources, kind of aligning them more into consultative-led sales, transformation-led sales. So obviously we need to kind of, reskill and also kind of attract a lot of talent. You will be seeing that we've been able to bring on board a fantastic talent into the organization who joined us as professional entrepreneurs, right from leadership. Now the next level of hiring also is complete, and then we have a fighting fit organization ready. And not only the sales and the geography resources, we are also building new practices in terms of the grow. You would have seen that we have progressed with our new ray products and services. I'll talk about that. And that's been an arrowhead in terms of the cloud-first services. And, we've been strengthening our application automation and analytics, which we call the AAA. We're kind of transforming our infrastructure management services business into digital IMS. So this is exciting time, and the grow business is going to be the fuel growth and the engine of growth for us. This also is going to kind of help us position ourselves as a challenger in the marketplace, which we've been consistently talking about it. And the new 3i has to focus on how to kind of acquire new logos aggressively and kind of expand our existing businesses with this new line of business. So that's a grow business for us. The build business, just to refresh our memories, we also, in parallel, as we are growing aggressively with the current lines of businesses which have been digitized and transformed and consultative, we also want to build for the future, and that's the next gen business we're talking about. Can we also kind of get these 5G powered services and IoT services or blockchain, and some of these as center of innovations, we've already kind of started investing in it, and we got early green shoots. We're running prototypes and pilots with customers as well. So that's the quick snapshot and refresh our memories in terms of our business strategy. And as I said, just to look at some of the new 3i's business lines, apart from our classic application testing and infrastructure services, data analytics is really picking up. In fact, the teams have been able to kind of bring on board plenty of new clients in the data analytics space. We're investing in a COE on AI, ML, cognitive computing services. And there's maybe in Q3 when we speak, we'll be able to kind of talk about some of these next gen services deals which we have signed up. And towards the end, I'll also talk about some of the good news for all of you in terms of what the team has been able to achieve in Q2 as well. So broadly, these are the lines of businesses. I won't spend time because I want to keep more time for questions and also kind of expand on the results and proactively answer some of the frequently asked questions so that there's clarity for you, all of you. Quickly on the new 3i's products, platforms, and solutions. In Q2, proud to share with you all, we have launched our new 3i series, which is our cloud-first series. The 3i Plus has been co-partnered with Oracle. It's an Oracle-powered cloud services in terms of the entire PaaS, in terms of SaaS, in terms of we have a product called New Edge, which is a SaaS services which we're offering, and also now we are also expanding into New Cloud and New Desk, and some of these are the foundations for other services because there's a convergence of IaaS and PaaS happening, and this will help us to use it as a beachhead as we're expanding. And we will share some successes of how we are progressing. We are also launching this NGRC, which is our Global Risk and Compliance Platform as a Service, and the beta trials are done. We're now launching them commercially as pay-per-use models as well. These are also going to kind of help us get us new lines of revenue and higher margin, sustainable revenue lines as well. So let's quickly get into the financial results. I think that's the key part of it. This is as reported, and I'm not going to kind of maybe we kind of expanded some of the lines which are not there in the SEBI LODR reports. So, for example, if you look at it, the good news, if you look at it, our revenues are going up. We've grown in terms of from a 159 crores to 177 crores in revenue run rate. So that's kind of the pace is setting in, the sales rhythm, the business rhythm is setting in, and that's the positive side. So we kind of very quick time out of the carve-out with all the changes. It's a new team in place in just 6 months. I think we are stepping on the accelerator, so that's the good news. And also the next step is also trying to focus on how to enhance our gross margin. We've been consistently talking about the revenue mix change. We will talk in the coming slides how we are also kind of changing the revenue mix, and hopefully at the end of the year our revenue mix changes and our gross margin mix as well changes to a kind of a more profitable business, and which will lay a foundation for the future as well. Broadly, we also talked about there are some residual business in terms of non-novated customers in our product business, which is almost like 3.8 crores, just to ensure that we have no disconnects in the numbers. So net effect is 332 crores is what we have hit right now in terms of our numbers. Even if we keep this run rate, I think we should be able to kind of reach 670, 680 crores as of now, even assuming that we don't book any orders in Q3, Q4. So that's the good news. It's almost close to more than 10% growth in revenues from where we exited. So that's a clear kind of positive. We're also kind of leveraging the momentum then overall industry as well. And it's kind of a mixed bag, and we're also trying to see how we can quickly go beyond our BFSI, industry vertical, which has been our mainstay. We are now quickly investing in some of the other verticals and see how we can expand. In fact, we have brought on board a specialist and consultative sales resources and center of excellence resources in various lines in terms of trying to see how we can go beyond some of the strong verticals such as like government and BFSI for us, and go after some of the next generation business. So we will see more action in this space in the coming months, and I will keep you all updated when we meet the next time around. And if you see the headcount also, it's been a kind of a movement which has happened, and I will probably the key part is that if you look at the entire the grow and build business is something which is the new one, which is high margin business. The COE is expanding slowly. All these will translate into more profitable revenue for the company. So you need to watch out for this grow and build. That's what is going to keep on expanding. And definitely our current revenue lines are also increasing. If you look at our application automation, which has been a mainstay, is expanding. Our business process services, we are happy to even announce that we just signed a large deal. We look out for our press releases, which will come out very shortly in terms of large deals we have won. It's almost close to a $5 million TCV deal we have won in our digital business process services. We're happy to talk about it. And the digital infrastructure management services also is now expanding. We kind of built an extremely strong team in the India geography, and this is going to disrupt the existing infrastructure management services in the space. And we are hoping for huge traction in Q3, Q4 in this space as well. Yeah. So as we move on, wanted to give you a kind of a more simplified results on a normalized EBITDA, because there's a lot of questions in terms of, we have booked a lot of cost and the Q2 is kind of negative. So I wanted to kind of spend some time and explain this to all of you, because it's very important that we are all on the same page. The focus has been for New 3i is strengthening the foundation. So it's very important for us to pause and strengthen this foundation of this new organization, because we've been in business for almost now 25 years. We need to start this new S-curve. So the logical point is the product business has been carved out. The services business is now kind of have to build on its own. So we said, fine, we will now start this New 3i. So one of the key, interventions, we have done this also in line with the new global risk and compliance policies. Harish is there with me. He's kind of, laying this foundation for this. He said that we'll bring all best practices in and let's get this right. Build an organization which is built on transparency, trust, and integrity. So that's very important so that you as a shareholder and we as a management team are together in building this company together. I think that's extremely important for all of us. So what we've done is we have gone ahead and done a bit of proactive provisioning in this quarter. So I'll expand on that. See, for example, we have gone ahead and provisioned doubtful, and slow-moving debts for in this quarter, and that's very important for all of us, to just ensure that we are all on the same page to the level of almost, if I can, maybe I'll expand this towards the end because it'll be easier. We have also proactively provisioned all employee-related costs. Say, for example, typically 3i used to, pay the performance bonus of the previous year. Let's say for the last year is paid this year, and obviously it's provisioned this year. Now, what we've done this year is we've done both. We have paid the last year's performance bonus. We went ahead and provisioned for this year's performance bonus as well currently. So it's a huge change in the way we have been proactively doing it. So what it does is that, we don't have any surprises there. It's very clean. We kind of provisioned all this. So in fact, to the tune of almost 5 crores, performance bonus for this current year has been provisioned. So that's a key change. And what it does, no surprises for all of us. Second, it's positive for the company. Now, if the company is going to spend this 5 crores in performance bonus, all of us would have done an extremely great job, and the company would have delivered fantastic results. So I think it's a kind of a great balanced scorecard methodology by which we're using it to ensure that we get this right. So that's what we have kind of done that. So even if you look at our normalized EBITDA in this slide, if you look at it, we are positive to the tune of the H1, we are almost positive in terms of 2.4 crores. You need to read this in context. The next slide, I'll explain that because we are doing multiple things in parallel. We are fixing our run business. We are investing in the growth. We are investing in the future. So it's an extremely tough balancing act for the company with the limited resources we have to do that. And I think the team has done that. So if you look at the exceptional points in terms of almost close to, we're talking about 24.1 crores is where we will explain that details towards the expense towards the end in terms of what are those exceptional items or what are those items so that we'll probably have the run through of the P&L for your benefit towards the end so that it's easy for all of us to understand. But the key point we want to know is even if the gross margin, if you look at it, though it's around 12.6%, actually what we have done, we have kind of optimized the run businesses. We have invested in parallel on the grow and run. Maybe the next slide we'll talk about that a little more in detail for all of you. Yeah. So this is an expansion of how we are kind of dimensioning our organization. We have kind of broken this business into 3 parts: the run, grow, and build. If you look at it on a normalized EBITDA perspective, the run business, we are profitable, in terms of 11.6% 6 crores profit. But what we have to do, we have to manage the past. We are cleaning up the past, providing to ensure we don't have surprises. We need to invest in our grow and run and build as well. The future of this company depends on this grow and build because it's very important we do this balancing act. It's a very difficult act of, managing the run, growing in parallel, and investing in the future. So you will consistently keep getting this feedback from us from the run, grow, and build. Slide. Sorry. If you look at that, the one key point I want to say, even as of now for H1, the grow business, our gross margins have already improved to almost 20.8%. So it's a very clear effort we are making to ensure our gross margins are higher. And we want to take it to north of 30-35%. We will also talk about that in some of the next generation deals we are closing, where it will be 35+%. This will kind of, balance us overall in the next 2 quarters to ensure that we'll be able to kind of, come out with great flying colors at the end of this financial year. Yeah. And this is quickly, again, a snapshot of the regional business, the US, SAG, South Asia, which is India, predominantly Middle East, KSA is our Saudi Arabian business, APAC and UK. Broadly, this is our mix. So if you look at it, there's huge opportunity for improvement for us. One of the biggest opportunities for 3I is that our export business has been very limited. So that is why if you look at our gross margin has been typically lesser because it has been predominantly country to country business is what we have been doing. So one of the biggest shift we are doing is going back to the basics, building the global command centers in India, in other low-cost geographies, which will help us change the revenue mix and the gross margin mix. And the competencies have been built, the delivery capabilities have been built. Even now, deals are also now coming in where we are slowly changing the mix. So this will drastically change the gross margin mix of our businesses as we're going by. We'll stay focused in some of these geographies because we don't want to spread ourselves thin. We want to kind of strengthen our current geographies. And some of the other part of the restructuring programs, we want to kind of, close down some of the multiple country geography units, which also has a huge stress and a load on our system in terms of cost, in terms of administrative cost. We want to eliminate all that. Hopefully by another 3 months, we'll have a more cleaner organization structure, which is lighter, slimmer, agile, and aligned to our grow and run business. Build the business. And if you look at, again, from a revenue lines perspective, this is AAA is application automation and analytics. This is the rebooted, application development and technology services. We have our infrastructure management services and the BPO services. And the cloud first business is the good news. If you remember, start of the year, we spoke about it. We kind of, that unit is now opened as account. We already clocked almost 1.1 million. The revenues are happening right now. But the key message here is, we've just closed one of a very large deal and, we're just waiting for the contracting and we will be happy to share that very shortly with all of you. This is going to be transformational and we are happy that our strategy is working because we are using cloud first as a disruption strategy to kind of, win these large deals. We will share these details shortly once we have done with the contracting. But I want to kind of assure you that the large deals are now starting to come in, and these could be really game-changing for the organization. And also quickly, in terms of our revenues by clients, this also is a kind of interesting position 3I is because since we've been there in the business for a long time, maybe we were under stress for a long time, we have a good client base which we can leverage. So if you look at it, $1 million plus, we have almost close to 17, 18 clients. It's a great opportunity for us to kind of make them into a $5 million account. So we're getting all these basics done in terms of trying to say how to mine these accounts more effectively, try and see that can we kind of have focused teams who are going to kind of expand these accounts. We have focused practice leaders who are working on these accounts to see, can I have cloud first? Can I have a AAA services? Can I have digital BPaaS? So that's the way we are kind of going into each of these accounts. So maybe the next time around when we meet, we'll also try and see that, how our revenue mix is changing, how we are able to expand into all these accounts, because that's extremely important because the expanding our existing accounts is a key focus area. In parallel, definitely we want to also invest in hunting in terms of, getting new logos and, bringing them on, because there's a lot of disruption and churn in the industry. Cost pressures are there for every customer, and that's a big opportunity for somebody like us to kind of, get in and kind of, and get these new businesses. So broadly to summarize, top 5 customers is around 52 crores, top 10, 81. So it's kind of a nice mix. This also kind of, helps us de-risk ourselves, because unlike in other companies where you're kind of skewed towards a few customers giving a lot of revenues, we de-risk ourselves. and also helps us to kind of expand this business from here. And finally, just want to kind of quickly summarize this for all of you across these four parameters in terms of finance. If you look at it, we kind of grown almost 8.4% compared to Q1. That is from 173 crores we reached to from 159. That's a kind of a growth, and we've been able to hold our gross margins flat. As I told you earlier, we've been able to reinvest this back into some of the gains we had in gross margin. We are reinvesting into grow and build. We have to keep doing it and do the tightrope walk, and I need all of your support as well. Support the new management team to help us as we are kind of doing this tightrope walk. If you look at it from our overall H1 revenues, it's about 333.2 crores. It's where we are. And in terms of exceptional items, I will kind of run you through that separately after this, so that maybe we can proactively answer some of the questions which might be in your mind. You have gone through our results. So broadly on the other parameters, we talk about the business and operational excellence is very important, because we kind of Harish's team is now leading this entire margin enhancement for us, because we need to kind of maximize our margins, eliminate waste. In fact, we are targeting almost 10 crores savings in H2, which is very important, because for us to kind of balance these costs investments we make. So this savings will come from the run business. If you look at the funnel, that's the good news. If you look at the funnel, I think we have got a good funnel in 6 months, and we are just stepping on it. It's a classic, almost close to around 10.800 crores funnel we have, and we are hoping to kind of convert a large portion of this funnel. That the team is working hard to ensure that we exit this year with at least 100 crores order book, which we can add to our exit revenues this year. So at least, if we are able to exit this year with 685 crores, with another 100 crores, we should be next year, hit around 850 crores. So that's the kind of a target. And if you remember, I promised 1,000 crores in 3 years, and hopefully we will stay up to our promise. So broadly, that's about it. I'm not kind of touching up on all the points. This will be available. The team will share this presentation and all other. We also made a kind of fact sheet ready, which will be available in our websites as well. So what I will do is maybe specifically to the results, I will just spend a few minutes explaining some of the frequently asked questions, so that I can reduce the number of questions which comes to me. So I'm just going to proactively do that. If you look at the results which we were uploaded yesterday, if you look at 4A, which is expenses, employee benefits expense, it's gone up from 123 crores in Q1 exit to 138 crores. So almost 15 crores has gone up in terms of employee benefits and expenses. Now, if you look at that, just to kind of expand on this, trying to kind of put this in perspective. 2-3 levers. One is the gratuity part. Fundamentally, if you look at some of the other countries, the gratuity laws are changed, and obviously we have to provision higher, because, for example, in Middle East, now we have to provision it against the entire total cost versus base pay. So that's an impact which is there for us. In India, we have done a kind of actual valuation, which is also for our 4 crores. So almost close to around 6.5 crores is towards gratuity. So we want to kind of get this baseline of our people cost right, so that we have no absolute surprises. So that's what we have done. We kind of provided for that. That's one. And second, as I spoke to you earlier as well, we have provided for 5 crores for performance bonus for this year. Normally, 3I used to only provide, pay and, provide for the same, so it's for the previous years what we kind of pay out in the next year. So this year it's kind of a double hit for us. We paid for last year. We have also provided right now. and to ensure that we don't have these cascading effects in the years going by. And this also will be a positive for us as well, because this is also going to keep it clean, and we are hoping that the businesses are going to earn this out for us. So this is a performance bonus which has been provided. So that's on that as one major item. I think this will be a question which most of you might have in your mind. The other bigger one is if you look at expenses for E, which is other expenses. I think that's another big one, which is it's gone up from 20.5 crores to 36.63 crores. If you look at that, the entire expense, if you look at the 16 crores, is the increase which is there, and you might be wondering, what is this? Why is this? What is this expense? So we have provided for proactively for it's a provision of almost 14 crores for slow and non-moving debtors of 14 crores. Just want to clarify, this is just purely based on our new policies and GRC policies. We are kind of getting very aggressive on these provisions. On the same hand, our finance teams and our business teams are working very hard to collect this money. So these are not bad debts. These are not, this is just aging debts. And some are maybe sometimes even because of COVID, the DSOs are going, higher. So we have provided for it. I'm sure we will be able to collect minimum of 50%, 100% of 50. Since we're 100% sure, we will for sure collect 50 to 60% of this in this financial year. So out of 14 crores, we're very, very sure that 78 crores will be collected in the next 5 months. But we have kind of done that to ensure that we don't have any surprises. That's one. And we also gone ahead and provided for the contingency, because there are to ensure that we don't have any more surprises, And also we are trying to kind of finish our deal with Accenture and Apex Partners and try and see how to kind of finish the deal so that we don't have any contingency which is provided. So these are provisions we have made in terms of this 16 crores as well, just to ensure that all of us are on the same page. So broadly, those are the big ticket items. The other small ones are there, but I think we will be circulating this shareholder fact sheet for all of you, so that you could probably that will be helpful for you with all these comments. So I'm not touching about the other minor ones, but I've just touched on the two large ones, which might explain the kind of negative view which we have got this time. But if on the long run, this is going to be good for us, and we will definitely end the year positively with these proactive interventions. So broadly, I will pause here, and Snyder, maybe I'm more than happy to take the questions.
Thank you, Thompson, sir, for your time and for the quite elaborate presentation. Now we will move on to the question and answer session. We request any candidate, any participant who would like to ask a question, please use the raise of hand tool, and please raise your hand. We will accordingly unmute you. You can further unmute yourself and ask your question. Request you to introduce yourself before you ask your question. Alternatively, you can also use the chat box to ask a question, just in case you face any kind of technical issues with the raising of hands. So we will quickly get into the Q&A session. The first question is from the likes of Mr. Virendra Verma. I will unmute you, sir. Please introduce yourself and go ahead and ask your question. Yes, Mr. Maru.
Hello.
Yes, Mr.
Yeah. Yeah, sir, just few questions. Like you mentioned that few provisions have been made in the September quarter. Could you say why this thing? Because there was a very long drawn planned restructuring. Whenever these kind of doubtful numbers were there, it could have done previously, maybe in the previous quarter, because this is the first quarter where we are having a reduced share capital. That is the first question. Second question is, there is still a debt of say 100 odd crores, and if to our understanding the company could have been debt free by this time. If you can just throw light on that.
Yeah, I'll answer the second question. That's an easier one because why we are still holding is that, we have still not completed the FCCB bonds. So that's our last debt, and we have already provided for that. So technically, if you look at it, the details, it's debt free because we have provided for that as well. Yeah, so that's the FCCB bonds which are there.
So the reason it got delayed was we were waiting for the RBI clearances for the transactions to be done. So we got it recently, and in it's a matter of a few weeks, I think we should be done with that also. So that was in regulatory requirements because of which it got delayed.
Okay. And the first question?
Yeah, see
On
on the first question, if you look at it, there are two parts. Q4 was a very interesting year for the company because last year Q4, because we had done the deal, and there are too many things happening for the company in parallel, right? The deal was done, and we had overlapping this Q1, Q2. Also, we had residual actions of the deal. Even right now, as we speak, we're just closing out some of the last portions of the deal, in terms of Saudi Arabia and all the stuff. So that's kind of an overlap which was not anticipated. And from a new management perspective, I can only talk from a April 1st perspective where we are taken over. Now, if you look at it, last year definitely we had, if you see our numbers, obviously with the deal money, we had huge profits. And the commonsensical question anybody will ask is, why didn't you provide for all this or clean all this in Q4 or Q1? I might not be able to comment on that on the Q4 part of it because we were not part of it. The new team was not part of it. Q1, if you ask me, was absolutely new for 3i, and we wanted to be doubly sure to get a clear handle of where we are today. So Q1, we used it to ensure that we get our space right, get our handle right, get everything right. So now we are very, very clear to ensure that we don't have any more, surprises for us. So if you look at it, we have done it proactively now. Most of this, 70% of this in my sense is, will be kind of, God willing, will all be reversed because we'll be able to collect money and, we're going to provide it for it. Yes.
Okay, sir. So we can expect no negative surprises going forward.
Yeah, absolutely. See, that's the purpose. If you ask me, we all debated that. See, the point is we could have done it over Q3, Q4, but I thought, we thought that it's good to just do it proactively and to ensure that we don't have any negative operational surprises for us, so that we are very clear, we run with it, we focus on our business, and we create value for all of you. Yep.
Okay, sir. Thank you, sir.
Thank you.
Thank you, Mr. Verma. The next question is from the likes of Ms. Savlan. Please introduce yourself and the name of the company you represent and go ahead and ask a question, please.
Hi, this is Purushottam. I'm an individual shareholder. I just wanted to ask a few questions on the pipeline development that is happening. How's the overall pipeline over last 5 odd months since the new management has taken over improve? What are the kind of large deals we are contesting? Large deal meaning $5 million plus kind of deals. And are we already shortlisted in some of the large deals? And how's the business mix improving more towards the US, Europe kind of geographies where presumably you will have higher margin businesses coming? So that's what I wanted to know. Thanks.
Yeah, thanks, Mr. Purushottam. I think it's a great question, my favorite question as well, because that's very important. One of the first things we have done, Purushottam, is that we have set up a separate global large deal team. So the purpose of this large deal team, in fact, Sudeep Narkarni, our Chief Revenue Officer based in US, leads that, is only to focus on deals which are minimum $3 million to $5 million ACV, annual contract value, or at a minimum, 10 to 15 million TCV and upwards. So that's the first step. So that they are super focused on that. They are like a horizontal function. They work with all the practices. And to your point, our beachhead now is cloud first. We are leading with cloud first as a cloud transformation. We have partnered with Oracle with the new rebranding, which is really helping us get a kind of attention which probably 3i never got. Now we are getting that right now. We are getting invited to a lot of deals. The other part which you spoke about also, if you look at it, the pipeline is very healthy because we have kind of repositioned ourselves. And if you look at the pipeline, as I spoke earlier also, we are almost close to, as we speak, we have, if I look at from a high probability or when you said shortlisted, maybe what we call internally as a L4 stage, where we are at a commercial proposals level, we are almost close to 80 to 100 crores of pipeline which is there across the world, and probability of winning is almost 30 to 40% out of that immediately, and I'm talking about Q3 closures. So that's a very a decent pipeline for us, because especially, and what I'm saying is this is also not on the old lines of business, the new lines of business, where the margins will be around minimum of 30 to 35%. And to your other question, are we shortlisted? I think, I was wanting to give the good news today, but I'm just waiting for the formal signing of the contract. Maybe you can see a media release very shortly. We will release a large deal in US, and we have kind of almost inked that, and we have beaten in competition some of the likes of all big Taiwan players. So that's a kind of a big win for us, truly. And also it's a big motivation for our teams, because this is also validating our strategy. It's a cloud transformation deal, and along with managed services, it's kind of it disrupts the cloud service providers' revenue. It gives us the managed services providers' revenue in terms of 5 years, and also it also gives us ongoing for our customer, their customers onboarding. It's a kind of a per customer model. So we kind of disrupted the commercial model also. So it could be almost close to, for us, a TCV of $30 million spread across 5 years, an annual contract value of $6 million. So we will be more than happy to announce that shortly, and you can look out for a press release coming from our side, and a large deal. So that's just a sample of that, and we are working on some of these large deals in some of these Western geographies, which, as you rightly said, will give us better gross margin. In fact, this deal will give us almost, even after a tough competition, we've been, as a challenger, we'll still end up making 30% gross margin, which is pretty good for us in our current state of affairs. So I don't know whether I answered your question, Purushottam.
Thank you, sir. We'll move on to the next question. The next question is from the lines of Bijoy Babu. Please unmute yourself, introduce yourself, and ask your question. Mr. Babu, you have been unmuted. Please ask your question.
Yeah. So my first question is, I'm referring to one of your interviews, so where you have mentioned, your short-term goal, the immediate goal is to see a profit of what Happiest Minds is making at the moment. So, which we are talking about 20% of the top line. So, I mean, if you could give any kind of a guidance, like what kind of a timeline are we talking about? That is my first question. The second question, I don't know if you could answer, but I would really love to hear if you have an answer. This I'm talking about the relisting. I mean, for many of us investors, it was kind of a catastrophic experience. However, things are getting shaped up. So, I mean, there was no clarity. So if you could touch base upon that, that would also be great.
Okay, I'll take the relisting first. Obviously, including myself, we had no choice of all this, because all this were set in motion long before this new management took, and obviously there is a statutory processes which are followed, and it has to happen, and it happened for us. But we are very positive about it, Babu, because now what is happening now, we have now the volumes of the entire capital reductions, we are probably right sized now. Now, the only way we could probably do is go up. We can't go below. That's where it is. So the positive is we are very upbeat about it. And now, with the cleaning up of our fundamentals and the foundation, strengthening of the foundations, and we're going to kind of keep doing this serious investment in keeping very strong fundamentals of the company. I'm sure this is going to be very, very value creation for all of us. So I'm very upbeat about it. And we need all your support, as shareholders, to kind of, be patient with us also. And, we will ensure that we create value for all of us. The second part of your question, Babu, is it's kind of we also need to set some goals for us. We might have a very large goal, which is $1 billion goal, which we are running with us. In fact, next week we have a global sales meet. We are aligning everybody. We got everybody to the last man aligned. So it's going to be like a armada or an army which marches in very single direction. We call it the AIM 30. AIM 30 is the 2030, $1 billion dream. We're very super focused on that, So that's clear. Now, coming back to that, in terms of immediate short-term goals, definitely we need to have some goals to run after. Happiest Minds is definitely a goal for us, because if you look at the same size, but the plus point for them is, they had a head start. They were able to create that company and build it the way they wanted. It's an iconic leader as well. So for us, we are 6 months old baby right now, but we are very unique because we have to transform an existing company. I'm sure if you look at from our profitability perspective, we are on the right track, because on one side, we want to eliminate waste, optimize our cost, change the revenue mix we are doing. Slowly and steadily, the revenue mix will change. And I'm sure, at least in 1 year from now, 3-4 quarters, we'll be able to kind of, probably beat them, Babu. That's our target. Because see, we have a momentum, we have a larger momentum, we have a larger brand. We were there. So our recall value is far higher today. We don't have to really, work hard. We have to just go back and tell our customer, boss, we are back. And they are ready to talk to us. That's about it. So definitely we will beat them.
Thompson, and I definitely appreciate your talks about employee centricity. I mean, this is something which we are missing in many of the organizations, and I hope that momentum will continue, and that probably could add value to our company.
No, absolutely, Babu. Thanks a lot, because employees are the core, and we firmly believe they are the differentiator, because the culture and the value system which we want to build on employees is going to differentiate us in this world of automation, digital, and human rights. Human beings are going to be the differentiators. Yeah, thank you, Babu.
Thank you, Mr. Babu. We'll go to the next question. The next question is from the likes of Mr. Harpreet Punj. Sir, you may go ahead and unmute yourself and ask your question. Mr. Punj.
The products you mentioned that you're going to launch a global risk and compliance software and the product in the 5G. Any timelines for that? This is number one. And second, there are some cash balances of 257 crores showing in the results. Are these net of the payment which we need to pay to FCCB bonds?
Yeah, maybe the exact ones probably I'll allow Sanjay and to answer on that. But to your point, yes, of course, because the reserves also, as I said, we have set aside almost close to 97 crores for the FCCB. And we also have our other accruals for us, which is there. And but I probably allow Sanjay or to expand on that.
Yeah, thanks, Thompson. Yeah, we have a balance of 257 crores as of 30th September. Now, this is primarily earmarked for the balance FCCB payments, which is kind of due in the first week of December. And the rest we have as part of our proceeds that we get from collections and part of our operations.
What will be net cash in hand?
Yeah, you're right. It's net cash in hand.
Okay. One more question, Thompson. You talked about the employee centricity, and you talked about the clients value creation. So any policy to be work on the dividends or yearly dividends kind of for investors?
Of course, I would love, Harpreet, one of the first things as a company we have to do is, once you're out of this woods and, we are kind of doing the, definitely we want to do that, and we hope and we will work towards that because definitely I'm not sure when we'll be able to do that, but to your point, the answer is yes, resounding yes. We need to kind of, come up with that when we will do that. And with regard to let's regard to our shareholders and with regard to employees also, we are kind of, you want to make them as partners. That's where it is. It's a question of digital, professional entrepreneurship, and we want to see more and more of our employees, leaders, our partners, and we also want to come up with more innovative schemes which are linked to performance, and they also have a part of this growth. So we want to kind of, come up with those also, and, more than happy to invite ideas and thoughts from, and on your other first question in terms of products, see, there's a huge launches planned. In fact, the Nure 3i series, we have launched multiple products. We have finished, it's commercial grade now. In fact, the Nure Edge and Nure Desk are Oracle OCI Cloud powered, and we are working together with the Oracle teams across the world, predominantly in APAC and US, where we are launching this into their customers, and their sales teams are working with us. So that's a big break for us because this gives us access to a lot of Oracle's customers also. That's very important. The second, the eGRC platform also, it's one of our co-creation with other domain experts from that. It's a joint IP which we own, and this is in our European subsidiary, and we are launching it in Europe and Middle East. So this, if you ask me the question, we are launching in January start. Now the beta trials and it's commercial grade. We just kind of, tying up the final ones. We had to make it again Oracle Cloud ready because we're going to launch it on Oracle Cloud. So it's also kind of helps us position it better because if it's Nure 3i Plus, which is Oracle, with the GRC, then it also becomes enterprise grade. It kind of builds a bit of GDPR compliance also. We are working on the last fronts on the GDPR compliance so that the accessibility of this platform and service will be far higher in upgrades. Thank you.
Thank you, Mr. Punj. We'll go ahead with the next question. The next question is from the likes of Mr. Sanjay K. Sir, I request you to unmute yourself and go ahead and ask the question.
Yes, Sanjay. Hi.
Yeah. Hi, good evening, Thompson, and great work. I mean, we're really happy to see increase in the revenue. Definitely a little upset about the profitability. So the question is about there is a cost of third-party products and services, and you already explained about other expenses, which both of them have gone up more than 60% or 50% compared to Q1. Whether the trend will continue for remaining 2 quarters, like the increase will be similar, or it will reduce for future quarters?
No. See, that's why I said, what we have done, Sanjay, is to ensure all the line items are explained, right? If you look at slow moving. So we have gone ahead, proactively looked at it for the whole year, and we have provisioned. So that we don't have any more surprises. We can only get better. So that's because then we have 2 quarters to get our act right also. So that's the thinking behind it. And the cost of third-party products, and it's again linked to the revenue increase because these are payments to some of our third-party partners, and it is linked to the revenue growth also. So that is the increase which is there from 14 crores to 20 crores to 6 crores if you're talking about that actually, right?
Sure.
To add to Thompson, the reason it went up also is due to the products business that we have in addition to services. Primarily this is kind of a, outsourced product business that we have. So, that was also one of the major reasons for this to go up.
Sure. Thank you. So are we seeing that for this quarter, the loss is about 30 crores. So are we seeing that we're going to get profitable by end of Q4? Are you planning in this year to get profitable?
No, absolutely. In fact, Sanjay, the key deliverable for us as a management team is at least to ensure that this new 3i starts with a clean slate and we are at least green. So I was even telling my board yesterday that at least we will be 1 rupee green, which sets the organization for the future with no baggage, no surprises, and we have a huge pipeline and an order book for next year. I think we are good to go. We have turned around as a company, Sanjay. That's what we are aiming for.
Sure. Thank you. And one more question about the branding and involvement of analysts or investors. So are we seeing that now some analysts will start covering 3IINFOTECH as well as on the branding perspective? Are we seeing, because current again a website is still old, and I'm seeing again things, a lot of good work is happening, but it is not coming out from the website, or even number of PRs are also less. Are we focusing on increasing this more brand awareness, sharing information, and creating better impactful website?
No, absolutely. Our CMO is here, and in fact, we had some challenges of migrating the website, for us also. So that is also a legacy challenge, Sanjay. One of the first big projects was to see how we can be cloud ready. So as we speak, if you see, we are all migrated everything to our cloud, including our website is now getting migrated totally from an on-premise to a cloud. So that was the delay. But we are launching a brand new one with microsites and with all that. To your point. Ideally, we'd have done it 2 months ago, but we had all these technology challenges, and we kind of overcome that. As that's a first step for ourselves, because we need to practice what we preach. Second, I think slowly, I'm not sure whether you're read. We are being covered by a lot of analysts. Slowly, there's a lot of traction. Even recently, I think there's a advisory which is covered about us. So slowly, there's interest coming up, Sanjay. In terms of people are getting curious, they're interested, they're talking about it. And definitely we will keep this brand building, because see, for us, it's very important that we need to rebrand ourselves, because we also want to position ourselves differently as a new 3i, which is very, very important to us. Because people still have huge recall saying, oh, 3i is that ICICI Infotech company, but this is, we have nothing to do with ICICI today. We are a totally new 3i. And we are kind of, re-establishing ourselves with the three I's, which is, innovate, incubate, and invent, which is what the 3I stands for. So we will keep that on, Sanjay, for sure.
Thank you. We go on to the next question. The next question is from the likes of Mr. Sunil Jain. Please unmute yourself and ask your question. Yeah, Mr. Sunil, you are unmuted. Please ask your question.
Am I audible, sir?
Yes, Sunil, that's right.
Yeah. Okay, thank you. Thanks for this opportunity, sir. And my question relate to, you said in the opening comment that you got around $5 million deal. And then just now you explained about one deal more of 30 million. So are these same or different?
Different deals. The 5 million is an Indian deal, which is a TCV of 5 million, which is India deal. The 30 million is a US deal. The US deal is the high margin deal. I think somebody else asked about the margin mix and, the US market. So the 30 million, that is 5 to 6 million per annum over 5 years is the US deal, which is our cloud first deal. The 5 million Indian deal is a 3-year deal in the BPO space, actually. It's a customer lifecycle management deal.
5 million per annum or 5 million?
The India deal is 5 million for 3 years.
3 years.
Around 1.5, 1.6 per annum for 3 years contract. For CLM, which is also the first time we are getting a CLM deal. We have never a CLM company. We are typically back office in BPO. So this is the first time we have got a CLM deal. So that's a kind of a unique scenario for us. It also opens up a new line of business. And also we are doing it digital first. So that's the uniqueness of it, actually.
Okay, great. And sir, second thing, you got a very good revenue growth in this quarter. So this revenue growth is coming from where? Means it's from, you had shown a chart that this is from Run. And
Grow also.
Okay. And but this is all coming from existing customer or new. You got a new customer. How you can you explain this?
Yeah, so there are two parts, because for us to recognize revenues, even if you get new customers, we booked a lot of new customers. Those revenues will come to us only in Q3 and Q4. Almost we've got some 8 new logos and all that new logos will give us revenues now in Q3 and Q4. But in these revenues for expansions in our existing accounts, where we are able to kind of get new lines of businesses, and some deals we closed very early in Q1 is where we did that. Predominantly, the traction has been in our application space, which is your application automation and analytics. That vertical has grown. We have also expanded in our IMS space also. Some of our existing contracts renewed, and they also gave us additional volumes in terms of business. In fact, of one of our large customers, we renewed it and we got more. We got almost 30% more from our competition. So that also contributed to the revenue growth. And it's also important that we recognize revenue fast, because the new deals, it takes time, right? Once we book a deal, transition takes 3 months. So it takes another 3 months for us to recognize revenue for the new ones. This was predominantly from the existing. We've been pushing new lines of businesses is where we have got it from, and some from the grow as well.
So whatever revenue you have achieved is more of a running business and nothing so one-time revenue in that.
Yeah, so that's what I said. See, some of the good thing is a good question, because most of this revenue, in fact, that's why I was able to boldly give a guidance saying that, with the current run rate, what we have, assuming even if you don't realize any more revenues with the new deals, we'll be able to come to almost 60-80 crores. So to your question, this will be more ongoing revenues. And we are getting more and more into managed services businesses, which gives us sustainable annuity revenue than project-driven businesses.
Okay. And since something has started in build part of the business also, where the revenue has come, though it is very minor. Yeah. So, but it's indicating that some business has started in that. So that's right. How you are targeting for the second half in that, or maybe if you can give a bit shorter term view, like 6 months or 1 year?
No, absolutely, because I'm hopeful that we will get our first build deal itself by Q4. We have a few irons at work, and these are especially one we are doing in blockchain. In terms of the security space and capital market, we are working on a blockchain deal where we are developing a kind of an end-to-end product. Second, we are also working on our telecom vertical, which is a building totally new. In fact, we are working on an MVNO platform, like, telecom, MVNO in a box. Some of these things we are working. Second, we are also working on cognitive services, which is also the data science powered AI ML deals. Also, we are starting to work. So what we are doing, even in build, we are being very careful about it. We are not going to waste too much time trying to develop a product and then try and see if we can sell it. It's a parallel activity. Though we have got very high-powered team. As I'm speaking to you, we are setting up an incubation center in IIT Chennai. And, some of these IITs, we are setting it up to attract some of the best talents also. So this will start giving us really high margin business. This could be even as high as 70 to 100%. Now, this is big time, margins which we will make. And hopefully our first deal should come in Q4, Sanjay.
So last question from my side. You had earlier said that you are targeting revenue of around 1,000 crore and EBITDA of around 100 crores.
That's right.
So 1,000 crore, it looks reasonable, but 100 crore looks quite low compared to this. That is equal to 10% margin. And you got a lot of lever, like 50% of business you will be adding with a high margin. Then existing business also, there is a lot of scope which you are talking about. So
good point. No, absolutely. See, what I told is, in my terminology, I give a blood commit. So when I give a blood commit of 100 crores, we spoke at a PBT level, not even EBITDA. We said PBT level 100 crores is what we committed. It's like a must-do number. See, if you look at it realistically, we want to do more than that. So it's a worst-case scenario, because we also had to ensure that we don't have any surprises from the past. So that's what we have been a little careful. Maybe 1 quarter down the line, if you ask me a question, I might be even more confident. I will give you a more bigger number, Sanjay, if you ask me.
And sir, just to one more, if you can allow me. Sure. About tax rate, what could be the tax rate in near term, and even do you have any carry forward losses or something like that?
That maybe I may not be able to. Sanjay, maybe can you help me in that? I don't know.
So we, primarily our taxes are in the US geography, and the other geography that we have in APAC. So in India, we have carry forward losses. So that's the reason our tax incidence in India is kind of negligible. And but our entire tax right now is in the US. I mean, which is coming from the US.
So any guidance on what could be the tax rate, if possible? Otherwise, it's okay.
We'll get back on that. Currently, it's difficult to provide a guidance because the mix of the region wise is changing. But we can get back to you on this question.
No issue, sir. Thank you very much. Thank you for answering my question, sir.
Thank you.
Thank you, Mr. Sunil. The next question is from the line of Mr. Vipul Shah. Mr. Shah, please go ahead, unmute yourself and ask a question.
Well, I'm getting confused. So whether this is a product company or it's a service company? Because
sorry, Mr. Shah, you're not audible enough.
Am I audible now?
Yes, you're better. Yeah.
So this is a product company or service company, sir?
So right now we are a services company, sir. We don't have any products. We have sold off all our products. So as of now, we are a services company. But definitely part of the build, we will build other platforms and products which will create IP in the future. Right now, we don't have products.
Right now, and which are the verticals you are concentrating on?
See, if you look at it, our biggest arrowhead today is we are focusing on cloud. So cloud first, as I explained, it's one of our beachheads. We are investing heavily in that. We have partnered and building COEs in Oracle cloud infrastructure led services. So the entire end-to-end on that. Of course, application development is our mainstay. Automation and analytics, we call it the AAA vertical. These are two mainstays. And then if you look at it from a digital business process services, even in the BPO space, we want to be digital led. So fundamentally, it is cloud first and digital led BPO is what we want to focus, not the traditional BPO. These are three important arrowheads. And from an industry vertical perspective, of course, we are there in BFSI and government, which is our mainstay. We are present in other verticals where I kind of shared that. But we are now also building in the telecom, media, and entertainment space also from a 5G perspective. That is our focus area, because that is not just for telecom industry, but they will be able to provide across 5G powered services. I'm talking about globally. India might be a little away on the 5G. It could be for healthcare, it could be for entertainment, it could be for food tech and agri tech. So our focus will be on being a leader in 5G and being a leader in the edge. So fundamentally, we want to be ahead of the curve in terms of being our cloud services are edge ready. So that's our focus area, Mr. Shah.
So once things normalize, should we expect your EBITDA margin to trend with other services companies
yes, sir.
in high teens?
No, absolutely, sir. Absolutely. Because we have a catch up to do as a company. Because till March, we were a product led company, which also did services. And since products were sold off, and now we are only a services company. So we have a catch up to do. We are also in a hurry and we are hungry. And I think somebody else asked a question that will you be, who's your immediate benchmark? And we said we'll at least try and be like Happiest Minds in terms of profitability. So of course, Mr. Shah, we will, strive hard to reach there very quickly.
Okay, Thompson. Thank you very much, sir.
Thank you, sir.
Connect you.
Thank you.
Mr. Well, the next question is from the line of Mr. Vishal Ghai. Sir, request you to unmute yourself and ask a question. Yeah, Mr. Ghai, please go ahead.
Hello.
Hi. Hi, Vishal.
Hello.
Hello.
Yes, Vishal.
Can you hear me now?
Yeah, we
This
can
is
hear you.
Vishal.
Yeah, hi, Vishal.
Yeah, Thompson, I do not have any questions. I just wanted to compliment you for leading 3i. I think every shareholder is extremely fortunate to have a team which has been set up by you. I've been following you on each and every platform, and I think you're doing a fabulous job.
Thank you.
We are extremely grateful. Thank you so much.
Thank you, Vishal. Thanks for the kind words, and we'll live up to your expectations. Thank you.
Thank you. Thank you so much.
Thank you, Mr. Guy. Anyone who has a question can please raise your hand, and accordingly we will unmute you and you can go ahead and ask your question. In the meantime, sir, there are some questions in the chat window. So Mr. Sachin Nandode has a question. Clarity with major the shareholders such as Sri and banks, are they invested for a long haul?
I'm not sure I can comment on that. I only hope and pray all shareholders are stay invested with us, and because it's very important that the company is turning around and they all stay invested, and we can grow together. So that's the way I would probably want to respond to that.
Sure, sir. Thank you, sir. We have another question from Mr. Sanjay K. What percentage of revenue 3IINFOTECH is getting from Asinto?
Okay, from Accenture. Okay. Yeah, we have a collaboration framework with them because obviously there are a lot of common customers because our ex-product customers who are novated are working with them, and our sales teams work together. If you ask me, new businesses, I don't think we have started anything because first we want to close the deal between both the companies because formally we need to close the deal, and then we will start our commercial engagement, because that is the understanding between the two management teams also, so that we don't confuse these things. So, but we are hoping to work together in the future to it's a benefit for both parties, to leverage each other. And these are complementary capabilities. And we will update you in this space shortly.
Sure, sir. Thank you, sir. Anyone who has a question can please go ahead and raise their hand. We will unmute you and you can go ahead and ask a question.
I think there's one more question, I guess. You said a target of $1 billion revenue. Yeah, how do you plan to generate that? Okay. I'll answer that question. I think this question is, you said a target of $1 billion revenue in this decade. How you plan to generate so it's a favorite question. I think most of them have asked it. Probably I'll just to refresh everybody's memory, the 3 tracks for us to achieve this. We've broken this into 3 parts. One is the global business region, the India business region, and the next-gen technologies. That's the way we want to break this into 3 parts. India itself will be a business region by itself, and we are targeting to drive 2,500 crores from India in this decade. It's like a separate company. That's where it's a huge market by itself, and we should stay focused on that. The strategy for India is different. The global business region is the larger one, which is where we want to drive and focus on 2,500 crores from that, which is our traditional business, what we do today, and we expand it and we drive that. Obviously, there will be more disruptions in terms of models, digital enablement, and it's cloud ready and edge ready and all that good stuff. The third is where we want to be a leader, predominantly in the next gen technologies, where we want to be a kind of a leader and a disruptor. Could be even B2B, and we don't see any reason why we cannot even do B2B2C or B2C as well, because it's cannibalization of industries happening. So that's the next 2,500 crores, and where we also hope to do the huge margins as well. So these 3 tracks, which is predominantly in a way like a run, grow, and build as well, if you look at it. Predominantly the run businesses will be replaced by grow. So we'll have the grow tracks in global business region and India business region, and the next-gen technologies, which we are now investing, will give us that, accelerated revenue as well, because that's a common question. How will you grow at 25%? Because that's where we will be able to bridge that. The second thing also is to that question, world is changing. By the time we end this decade, top line will be immaterial. It'll be only super focused on margins, and all of you will be only asking me on what is the end of the day, what will be the margins we will deliver, because it's cannibalization of top line which will happen. So broadly, that's the plan, for that question.
Thank you, sir. We have a question from Sharayanan. Please go ahead, unmute yourself and ask a question. You've been unmuted. Please go ahead and ask a question. Well, the next question is.
Hello.
Yeah. Hi, sir.
Hello. Hi, sir. Hi, sir. First, I would like to congratulate the team for turning up the company. And you have been, as some other investors said, that I have also been following you and following 3IINFOTECH everywhere, I would say. And I've been a long-term investor. First is, I would just like to ask you whether, at the time of relisting, why the price was relisted, why the company shares was relisted at a very, less price. When it got delisted, it was around 8 rupees. And when it got relisted, again, the price was only around 8 rupees. So if because the company has a better valuation, so if it would have been listed at a better price, the retail investors would have been much more relieved, rather than going through these, 2 weeks or 3 weeks of bit of a kind of a stressed out mode.
No, absolutely. Because see, from a company perspective, there is very little what we could do, because the process is very simple. Like, any other SEBI guidelines are very strict and they follow this process. Like an IPO, it's as good as an IPO, right? When you go back and relist it, it's as good as an IPO. The first 45 minutes is where the price is discovered for the company. Even if you do any other large IPO listing, the first hour is where the price is discovered. And for our company and the share, I know that's what the price which it discovered itself. So this question has been asked to us from everybody. All of us are very tensed about it, because we are hoping that we don't end up. But I think we will get there. And we are building a more solid, a stronger company, for sure, with more solid fundamentals, the way I look at it. And, we will have a better future together.
Thank you, sir. The next question is from the line of Mr. Shugan. Please go ahead, unmute yourself and ask a question.
Yeah, hello, Thompson and team. Yeah, your energy is amazing, sir, Thompson.
Thank you again.
Yeah. My question is sometime back we launched a new Ray product, right? How it is doing? Have we got any clients, something like that?
No, absolutely. So the new Ray series is launched. In fact, one of the good things which has happened for us is that, yes, of course, we've got our first customers also. We have some paid pilots happening, and the new Ray Edge product, we are in very advanced stages, because it's a kind of a volume product any company can buy. The new Ray Edge, which is a SASE product, can effectively replace any of your VDI or VMware solutions, and it's like all in a box. So that revenue line will pick up, and the positioning also is helping us in win other deals. Say, for example, because of the new Ray positioning of the company and the competency which we are able to demonstrate. In fact, the US win was because of that, though it was not in new Ray, but it is indirectly helping us to kind of build customer confidence, and we are able to kind of win the deal where our competition was all the tier one big boys, so it's helping us. And also, we have also been selected as a co-sell partner for Oracle in APAC. We are the only co-sell partner in India apart from Wipro for entire APAC to work on the OCI and also work on the other Oracle lines because of New Day. So
yeah, that's
good
to know.
We are launching multiple other products, go-to-markets, and we are also doing this countrywide, because every country is now saying the sovereign, every country says my data has to be within my own country. So we are also working very closely to launch these branded country clouds, which are not just like a pure cloud, but it includes the BaaS and SaaS as well. So we are launching the first one in Malaysia, and we are also going to launch our edge clouds in India and Eastern Europe as well. You'll hear more about it. There'll be plenty of action in Q3 and Q4.
Thank you, sir. So we have a few questions in the chat box. The next question is, what is your plan for Q3 and Q4 to reduce your cost, and what would be the outlook going forward?
Okay. No, I think I touched upon it, but just to kind of, re-emphasize that, cost optimization is very, very important because we have to do this fine balance between the run, grow, and build, and find money to keep investing in build and keep our fueling grow and keep the lights on and run. It's a tough ask. So the important point is we want to first practice what we preach. So as we are speaking, Harish is busy implementing the next generation ERP for us. Our HR has done the HR transformation from our HCM platform is being implemented. All the tools and technologies which we are now branding and selling, we are implementing for ourselves. I told you we have become cloud first ourselves. We are eliminating a lot of IT assets cost there. We are now putting a lot of productivity management tools. So all this will become a 3i. Even internally will be a kind of a digitally powered company, which will eliminate a lot of transactional work, stuff like that, which will definitely give us an upside of 10 to 15% savings in our current costs, which are there for sure. I spoke about it because in fact teams have taken a target of almost 10 crores. It's a big task, but at least we will run with that target to kind of see if we can reduce those costs. Because it's very important for us, because only then we can be able to, support some of the other costs and expenses.
Sure, sir. Thank you. And another question is, while the revenue growth is quite encouraging, what kind of gross margins can we expect in the new business? And what is it currently generating, and what can we expect going forward?
Yeah, so again, touched upon it. Definitely, the new businesses, we don't take any business, less than even in country to country business. We don't take anything less than 20%. So which is the normal guidance for the company from a gross margin perspective. So every new business we are focusing a minimum 20, and as we are expanding the mix of delivery models also, nearshore and export from other countries, we will end to almost 35%. And the cloud first and digital first also gives us that edge to kind of bring it up to 35%. So broadly, the answer is, most of the grow businesses will range in between 25 to 30% gross margin. The build businesses will be 50% and above. And so that's the way we want to kind of, focus.
Sure, sir. We'll take one last question. Thompson, sir?
Yeah, I'm okay.
Yeah, sure. So, question from one Mr. Raghu. Considering the fact that 3i has no promoters, is there a likelihood in the near future?
I don't know, because as of now, we are super focused. It's a kind of a professional managed team. We're a bunch of professional entrepreneurs who are trying to run it. And, I think the important point is to kind of stay focused on our deliverables and deliver our promise. And, maybe then it will become attractive for, future investors.
Sure, sir. I think that would be the last question. I would like to hand the floor over to Thompson, sir, for his closing remarks.
Yeah, anyway, thanks, Naida. I think thanks a lot for everyone for participating in this Q2 earnings call, and thanks for all the encouraging words of encouragement from a lot of shareholders, and I kind of request your continued support for the company, and so that we can build this company together and take this company to new heights and position it in the well-deserved place this company deserves. Thanks a lot. Thanks to everybody.
Thank you, Thompson, sir. Thank you, everyone, for participating. We look forward towards meeting you next quarter.
Yeah. Thank you all.
Have a great evening.
Thank you, everybody. Thank you.